In this video, we're going to talk about how to become a successful day trader for beginners. We'll review some of the best tips and strategies for getting started. So before we start, please like this video and subscribe to our channel for weekly investing tips and strategies. In contrast, investors who purchase and hold low-cost index funds that follow a broad market index such as the S&P 500 may have greater gains over time. Historically, the S&P 500 has averaged a 10% annualized total return. However, if you're still interested in day trading, it's crucial to follow some guidelines so you don't overextend yourself. There are a number of methods that can be utilized in order to increase the profits you make from day trading. However, the following 3 techniques should be prioritized in order to reduce the large dangers that are inherently associated with day trading. Number 1. Trade only with funds that you can afford to lose. When day trading, it is absolutely necessary to set aside a certain amount of money. Do not trade more than that amount or use funds designated for your mortgage or rent. Why? There's a chance you'll lose it. Number 2. Start small. Especially when you begin day trading, you will make errors and lose money. Limit your losses as much as possible until you earn experience. Number 3. Don't leave your day job. You may have a run of good fortune, particularly if the market is experiencing a lengthy bull run. Before increasing your efforts, you must observe how your trading method works when the market is volatile, particularly during a recession. Assess if you want to commit more time to trade after you have achieved regular profits. What are the best securities for day trading? To begin, you must choose the sorts of securities you will purchase and sell. Bonds, options, futures, commodities, and currencies may be traded on a daily basis, but stocks are among the most popular products for day traders. The market is large and busy, with comparatively cheap or non-existent commissions. The top stocks for day trading often exhibit the following characteristics. Good volume. Because stocks are liquid, meaning they move often and in great volume, day traders like them. Liquidity enables a trader to purchase and sell without significantly impacting the price. Some volatility, but not too much. Volatility means the security's price changes frequently. This kind of volatility is required for a day trader to generate a profit. After assuming a position, someone must be ready to pay a different price. Familiarity. You'll want to understand how the security trades and what triggers moves. You must comprehend how the securities trades and what causes price fluctuations. Will an earnings report hurt the company or help it? Is a stock stuck in a trading range, bouncing consistently between two prices? Knowing a stock can help you trade it. Newsworthiness. Media coverage gets people interested in buying or selling a security. That helps create volatility and liquidity. Many day traders follow the news to find ideas on which they can act. People get interested in purchasing or selling securities after media attention. This contributes to volatility and liquidity. Numerous day traders monitor the news for actionable ideas. Day traders that concentrate on stocks often depend on technical analysis, or evaluating the movements of stocks on a chart, as opposed to fundamental analysis, which examines firm fundamentals such as its goods, industry, and management. While some day traders may trade dozens of securities in a single day, others focus on a select number and develop a thorough understanding of them. This knowledge helps you gauge when to buy and sell, how a stock has traded in the past and how it might trade in the future. Popular day trading tactics. After determining which stocks to trade, you must decide the optimal trading strategy to optimize your trading profits. You may decide to specialize in a certain technique or combine many of the following 4 common strategies. Number 1. The range or swing trading strategy. Traders find a stock that tends to bounce around between a low and a high price, called a range-bound stock, and they buy when it nears the low and sell when it nears the high. They may also sell short when the stock reaches the high point, trying to profit as the stock falls to the low and then close out the short position. Number 2. The spread trading strategy. This high-speed technique tries to profit on temporary changes in sentiment, exploiting the difference in the bid-ask price for a stock, also called a spread. For example, if a buyer's bid price drops suddenly, the day trader might step in to buy and then try to quickly resell at the stock's ask price or higher, earning a small spread on the transaction. Number 3. The fading strategy. This sees a trader short selling a stock that has gone up too quickly when buying interest starts to wane. The trader might close the short position when the stock falls or when buying interest picks up. And number 4. The momentum, or trend following strategy. This strategy tries to ride the wave of a stock that's moving, either up or down, perhaps due to an earnings report or some other news. Traders will buy a rising stock or fade a falling one, anticipating that the momentum will continue. The manner in which you put these techniques into action is entirely up to you. Some traders, such as spread traders, may aim for a penny per share, while others, such as swing traders, want a greater profit before ending a position. Some traders may be prepared to hold overnight, but others would not and would rather keep a neutral position in the event that negative news arrives before they can respond. To choose whether to trade, day traders regularly monitor a stock's order flow, which is the list of pending buy and sell orders. Prior to making a purchase, they will wait for a company's price to fall to support the point at which additional buyers will enter the market and the stock is more likely to climb. To sell, they will wait until the stock reaches resistance, a point at which more traders begin selling and the price is more likely to decline. To make such decisions, you'll need a broker that displays order flow. Regardless of the method you choose, it is essential to select one or more that you can confidently use. It may be difficult to develop a successful plan, and even if you do, the market may force you to alter your approach. The optimal periods for day trading. The stock market provides liquidity and volatility most often in the hours after it opens, from 9:30 a.m. to around noon Eastern Time, and in the last hour before it closes, at 4 p.m. Eastern Time in the U.S. Theories exist during the most profitable time to trade, but the concentration of deals that bookend the normal market session cannot be denied. In 2018, 25% of average daily trading volume occurred in the final 30 minutes of normal trading hours, excluding the closing auction, compared to 5.5% in the first 30 minutes, according to a study by the Jefferies Group. A day trader may execute 100 to several hundred deals every day, depending on his or her trading technique and the frequency with which profitable possibilities present themselves. With so many transactions, it is essential for day traders to maintain low expenses. Managing day trading risk. The aforementioned guidelines can aid you in avoiding some of the worst day trading mishaps, but it's also crucial to manage lesser risks. Limiting your potential loss, or the amount of money you could lose on a single trade or position, is the main goal of risk management. When evaluating your risk, consider these key factors and questions. Position sizing. If the transaction fails, how much will you lose? The proportion of your portfolio. How much would your whole portfolio suffer if a position fails? This is closely connected to position size. Losses. Before selling, what number of losses are you ready to accept? Selling. At what point after a successful deal do you sell? Even with a sound strategy and the correct assets, not all transactions will be profitable. It's vital to have a strategy for when to terminate a position, whether it's merely mechanical, for example, sell when it goes up or down X%, or based on how the stock or market is trading on that particular day. Effective risk management prevents minor losses from escalating and helps you maintain money for future transactions. However, this entails that traders must be ready to incur a loss, which is difficult for many traders to accept while being crucial for long-term survival. Learn day trading the proper way. You may always practice paper trading using a stock market simulator if you are not yet ready to trade in the real market. Paper trading is simulated stock transactions that allow you to see how the market operates prior to risking real money. Paper trading accounts are offered by several brokerages. Using this method, you can also evaluate the platform and functioning of the broker, in addition to determining your potential theoretical profit. While it might be helpful to practice day trading under simulated settings, there is no alternative for trading with real money on the line. Here are some extra considerations to make before entering that realm. Develop a trading plan before you start. Losing money terrifies individuals into making poor judgments, and day trading requires occasional losses. It is crucial to have an exit strategy for each of your financial assets because it prevents you from making irrational decisions when you need to make reasonable ones. Be patient. Consider trading possibilities that satisfy your strategic requirements. If the circumstances do not permit it, do not deal. You are not required to trade if nothing seems desirable. Read constantly. Observe the markets on a consistent basis. Major news, even if unrelated to your assets, might alter the whole market's sentiment, causing your holdings to shift without company-specific information. Is day trading the correct choice for you? There are several ways to approach the stock market, and day trading is simply one of them. However, for the majority of investors, it is only marginally successful. Do you think day trading is a good investment strategy? Let us know what you think in the comments below. And don't forget to like this video and subscribe to our channel for more weekly investing tips and strategies. Thank you for watching.